Hello traders, we've got a different setup for you today. This one's going to be pretty fun. We're going to take a very high view look at EURUSD. I'm going to start off by taking us into the quarterly chart. Actually, let's do the yearly. 2022's high, 2022's low. As you can see, coming into 2022, from 2021, we had a very strong bear bar. It had swept just above the high of 20 before dumping off and closing near its lows. So going into 2022, you would anticipate that at the very least it would revisit these lows as a draw on liquidity, if not more. And you can see we got much more. It swept 2020's lows, it swept 17's lows, it had one hell of a push down in a giant wick and closed just back inside of 2020. So a bit of a Wiseman div bar. You could have anticipated a run up to the open or even these highs. The year's not over yet. We've still got 4 months, so I suppose that is still a possibility. Dropping down into the quarterly chart, we see the same, as I said, high and low for 2022. And we see that our most recent quarter swept above quite strongly, above Q2 of 23's highs, and proceeded to dump rather hard, which is where we're at now. Now we've still got about 5 weeks left on this quarter, but needless to say, seeing this type of action once you hit above old highs is not the most reassuring for bulls. We're currently sitting around Q2's open, so I guess we'll see. Now, should we take this next 5 weeks and push up and let's say get at least halfway back up this bar, so right around where this swept level is, or even better, above it, then I would say the end of the year you could anticipate running this high and maybe even coming up here. And if we were to come up here and break above this, then obviously you have other highs, and there's this ever so tiny, teeny tiny fair value gap up in here. If it were to do that, like I said, it's not looking reassuring right now, but should it close up here this quarter, I'd be eyeing this level and then eventually 2022 highs. Now dropping down into the monthly chart, once again, last year's action. This is July, where we swept above that high, closed down rather nasty below the halfway of the bar, known as a Wiseman div. It's usually a bearish sign in this configuration. So at this close, I was anticipating an open high low close bar, which is what we're getting now, with the draw on liquidity being at the very least the open from July, but targeting these lows. And in fact, today I did some scalps on the EURUSD that I was basically targeting that low, and we hit it by like, I don't know, a pip, half a pip. Like it was it was quite beautiful, honestly. So we're currently sitting down here and pushing, and my next draw on liquidity is going to be this June open. It's got a little bit of a down wick before it pushed up, so there could still be some buying power down there in these Q2 lows. One other thing I want to draw your eye to here is, so we had this action coming down from the end of 21, and we see this one lonely up close candle. in the middle of all this action. And you see that right here at this low, we essentially pushed up into it, and it acted as a, I guess some of you might know it as a bearish order block, perhaps. So just more confluence to this breakdown here. Now this is where the chart really gets fun. And this is what has me anticipating lower prices, if not immediately, before we see higher, let's say. So we've got a fib pulled of the 2022 price action. And I mean, talk about to the pit, or damn near. The 886 level is this 12,717, and the high of this candle was 12,757. So you're talking 4 pips. We came up 4 pips above this 886 before dumping off. So now you're just getting a closer view at all this stuff, all the sweeps and everything. But I want to draw your attention to 2 spots. We're now coming into this fair value gap on the weekly, okay? And we've got a fair value gap above us that could act as resistance. And we've got this ascending grind line, this very head and shoulder-ish look, if you will. These are, once again, the draws on liquidity I was speaking of. If we close like this, especially if we break through this fair value gap, it could get real ugly on price action before seeing any more upside. But one thing that maybe wouldn't totally shock me is if we got this one last push up, okay, maybe come down a little, bounce on the bottom of that fair value gap, come back up into this swept level before heading down to this fair value gap that is also below the 50% line of this giant macro move. So that puts us in a discount area. Sweeping these levels here. And also, that I thought was quite handy, gives us a damn near perfect 1-1 extension for this head and shoulder breakdown formation. So it's definitely something I would keep in the back of my mind and remind myself, if we do bounce in this region here without taking this liquidity, that yeah, it looks nice and it's rising again, but dollar's been strong. Global macro's getting uncertain between debt levels and wars and deglobalization. You know, there's just so many headwinds out there for the global economies. So I would not be surprised to see this up then slam down. Maybe we just fall on through. My least likely case from a probability standpoint is us holding here, continuing higher through here, continuing higher through here. I think Euro USD in the long haul over the next 1 to 3 quarters just really has some downside in its future. The path it takes, I guess we'll see. I'll follow it on this weekly and monthlies, see how the candles are forming, how they're closing, and what kind of draws on liquidity they're pointing towards. As always, good luck, have fun, practice solid risk management, and thanks for your almost 10 minutes.